We're always searching for companies that directly benefit from the current crisis. The ones you can circle the wagons around them. Because you know what? The market's going to get hammered again, and you need something that you know is doing well right here. Tonight, I've got another one for you. It's a long-time Cramer favorite. It's called MarketAxess Holdings. It's an electronic bond trading platform. Now, for years, MarketAxess has been fighting to digitize the stodgy bond market. I've been a fan since we had them on, 2.5 years ago. Since then, the stock's more than doubled, with a huge chunk of that move coming over the past month. Why? Because MarketAxess makes its money on volume, and with the credit markets whipsawing back and forth, trading volumes have been off the charts, up 50% year over year in March. That's how the stock spiked to a new all-time high last week before pulling back slightly. And it's not just volatility, it's also lockdown orders. The pandemic has forced tons of old-school bond traders to get on board with electronic trading. And I've got to believe they'll stick with this platform even when the quarantine's over because it's so much more convenient. Don't take it from me. Let's dig deeper with Rick McVey. He's the chairman and CEO of MarketAxess Holdings. He knows a ton about this business, get a better sense of how his company's thriving in this environment. Mr. McVey, welcome back to Mad Money.
Hello, Jim. It's nice to be with you again.
Well, Rick, every time I see you, it gets better and better, whether I bump into you on the street or you come on the show. But these numbers show to me that maybe you're kind of like the Netflix of bonds, that people discovered it. It's better than what they were doing the other way, and they can't live without it.
There are some similarities. There's a new way to trade bonds that happens to be much more efficient, creates more trading opportunities, and reduces transaction costs. So we've had a great run, and we're not happy about the reasons why, given the events of the pandemic and the hardship that it's created around the world. But it has benefited our business as the value that we deliver to our clients is greater than ever in this kind of environment.
Well, talk to me about this total credit trading average daily volume of 12.2 billion. And total trading volume of 269.5 billion. These numbers are outstanding.
They're big numbers, and March was an incredible month because when you think about it, we started March with all asset managers and dealers operating off their main trading floors. We ended the month with everybody working from home. So our teams just did a great job keeping everyone connected to the market, helping them get set up at home, getting all the security certificates done properly so that they could continue to trade with their clients through an extremely volatile period in March. And we did have record numbers. The order flow on the platform spiked over 20 billion a day. The completed orders, as you mentioned, about 12.5 billion per day. Not only were market volumes a lot higher in March, but our share increased through the month as there was a premium on secondary liquidity and clients came to MarketAxess to find the liquidity that they needed.
Rick, do you think people will go back? I remember the first time you were on, and I was just using picking up the phone and doing these trades, trying to get the best offers. And I couldn't believe that 30 years later they were still doing it until you. Do you think that there are people who have found MarketAxess, recognize that they were mistaken to continue with the old way, and are never going to go back?
We see significant client behavior moving toward a much more favorable view of electronic trading. And once traders really do begin to change their trading habits, they realize that electronically they can conduct more trades with their client per day. They can operate more efficiently. They can be in the middle of more trading opportunities. And once they experience that, they really don't go back. And we did have during the month of March a new record in terms of the number of client firms that traded on MarketAxess, as well as the number of individual traders. It really shows the sea change taking place in terms of people embracing electronic trading for a much bigger percentage of their credit trading volume.
Many people felt that because of the disruption from COVID, that the bond market would be in disarray. I heard it over and over and over again. I have to tell you, and not just from me, when I read through the Goldman Sachs conference call, for instance, they found it much more orderly than it had been before. How much of that could have been MarketAxess?
Well, I think we played a role in the functioning of the market through these extremely volatile times. And I look back, Jim, and you'll appreciate this going back to your early days trading high yield. But we looked at the move in high yield from February 24th to mid-March. and high yield spreads move from 400 basis points over treasuries, or the spread that investors demand for the credit risk in high yield over treasury securities, to 1,200 over in 3 weeks. Ooh. When we look back at the last great crisis in 2008, that same move in high yield took 11 months. So these were extreme conditions. The other thing we observed in 2008 is that market volumes went down during the event. In this event, market volumes have gone up and electronic market share has gone up. I think that speaks to the benefit of what we do to keep the entire global credit market connected on the MarketAxess platform.
Okay, so Rick, tell me, we hear the Fed saying, you know what, we're going to expand. We're going to start buying high yield. We're going to buy municipals. Does that mean that, can you see them bid? Do they use someone? How can you tell if the Federal Reserve's in there doing buying?
Well, we don't have any particular insight on exactly how they will implement the program, but our belief is that they will utilize the trading experience and straight-through processing and risk management of BlackRock. I think that's why they hired BlackRock as their advisor. It made perfect sense to us so that they can leverage that tremendous infrastructure of BlackRock to implement the program. So we'll see, but I would expect that that's the way the Fed will operate in credit markets.
Well, I got to tell you, I got to hand it to you. You told me it could go this way. I was thinking that they're hidebound, that they're just never going to change. And you got it right. And I know, like you said, you don't want it to be because of COVID. But, boy, this is the best way to trade. Rick McVey, Chairman and CEO of MarketAxess Holdings, and a visionary, sir. Great work.
Thank you, Jim. Great to be with you.
Thank you. He told me it was going to happen. Frankly, I was skeptical because I know that industry, but I didn't know it as well as he did. Man, money's back in, right?
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.